Have you ever really wondered what sets apart, Wall Street's biggest, most secretive hedge funds?
Hmm.
For decades, there's been this incredibly powerful strategy, almost mythical, right? High-frequency trading.
Yeah, HFT.
And it's been locked away totally behind their velvet ropes.
Yeah.
It's like it's the ultimate secret sauce, the thing that turned the Wall Street elite into billionaires.
That's absolutely right.
If you didn't have 9 figures, if you weren't, plugged into that inner circle, you couldn't even get a look.
No chance.
But what if? What if those barriers, that secret financial firepower, were finally starting to crumble? What if that gate was about to swing wide open, maybe even for you?
It's a really compelling thought, isn't it? I
Yeah.
mean, the sheer power, the impact of high-frequency trading in finance,
Yeah.
you just can't overstate it.
Right.
We're talking about an entire ecosystem built on proprietary tech. Millions, maybe billions, just to develop and maintain it.
Wow.
Think about it. The infrastructure, dedicated fiber optic cables laid perfectly straight just to shave off microseconds.
Incredible.
And of course, just massive pools of capital needed just to play the game. It's not just about trading fast, it's algorithmic precision, these tiny, tiny advantages, executing millions of trades daily, often before, a human eye can even see the price change on a screen.
Before you even notice.
Exactly. And this exclusivity, it's built this huge moat around the financial elite, let them pile up wealth at a pace nobody else could touch. It's been a key driver, honestly, of that huge concentration of wealth we see. Just a few players holding so much.
Yeah, that exclusivity is precisely why what we're diving into today feels so, revolutionary. Today, we're really digging into how this very closed-off world of high-frequency trading is maybe, just maybe, starting to open up. We're looking at one model in particular, the quantum fund, as a kind of case study.
Okay.
Imagine, just for a second, getting access at the same speed, the same precision, the market edges that built those old money hedge funds. Quantum Fund is positioning itself as the world's first crowd-fueled, multi-bot, self-learning HFT mutual fund.
That's quite a description.
It is. And it's designed for people who, refuse to settle for just average returns anymore. Now I can almost hear some listeners thinking, okay, is this just another buzzword project?
Yeah, the skepticism is understandable.
Another shiny app that promises the moon and then, poof, rugs you next week.
Right. We've seen those.
But no, that's not what we're talking about here. This is presented as a real, actually regulated path to participate in the kind of strategies that were, for so long, just for the ultra-wealthy.
And that, I think, is the real paradigm shift we need to focus on when we talk about something like the quantum fund.
Okay.
The significance of, let's call it democratizing, such an advanced, powerful financial tool, well, it really can't be overstated.
Right.
For everyday investors, for you listening, to get access to something that was previously just for institutions, for the super rich, it levels the playing field in a way that was honestly unthinkable even a few years back.
Completely unthinkable.
It's not just about getting a slightly bigger slice of the pie. It's like getting access to the oven that bakes the pie, the actual machinery that generates that alpha.
I like that analogy, the oven.
Yeah. Imagine having the tools, the insights, the execution power of a quant trader, but without needing millions for a setup or specialized knowledge, or navigating those complex regulations for your own fund.
Right. None of that headache.
Exactly.
Right.
It really represents a profound rethinking of who gets to benefit from the most cutting-edge financial strategies, moving towards a future where these tools aren't so exclusive.
That makes total sense. So the big question, the really exciting part is how? How does Quantum Fund actually plan to achieve this? How do they open that gate? Well, it apparently centers around what they called the swarm, this dynamic family of specialized trading bots, each one a master of its own little domain.
Okay, the swarm.
And that's where we're going next. Let's meet the brains, or maybe the bots, behind the breakthrough.
Yeah.
Okay, let's dive into the swarm idea. So Quantum Fund isn't just building one giant superbot trying to do everything.
Right, that's often less effective.
Instead, they unleash this coordinated swarm, like you said, a collection of really specialized trading bots, each engineered for a specific niche. And what I find fascinating is they're not just, cold algorithms. They're kind of designed with distinct roles, almost like characters in an orchestra.
That's a great way to put it. And strategically, this multi-agent approach, it's brilliant compared to trying to build one general-purpose bot.
Why is that?
Well, think of it like building a sports team, right? You want specialists.
Yeah.
A master goalie, a star striker, not one athlete playing every position.
Okay, yeah.
Each bot in the swarm has this single super-focused objective. It lets it optimize, react with incredible speed, and develop a deeper, almost intuitive feel for its specific market niche.
A feel.
Yeah, kind of. And this specialization, it reduces the risk of one single failure point. And crucially, it lets the whole system adapt to diverse, changing market conditions much better. A general bot might be okay at many things.
But not great at any one thing.
Exactly. A specialist bot can achieve truly exceptional performance in its area. It's about distributed intelligence. That's the core advantage.
And when you bring these specialists together, the synergy, that's where the magic happens, presumably.
Precisely.
So, okay, let's meet some of these characters in the quantum fund swarm.
Let's do it.
First up, they talk about Scalper X, the speed demon. This is apparently the original bot, just lightning fast.
Okay.
I picture it like a Formula One car, but instead of just driving the track, it's slipping between the microspreads. Those tiny fractions of a penny humans can't even, let alone trade on.
Right, the bid-ask spread.
Yeah, and the volume is wild, 100 to 1,000 trades a day.
Wow.
It's so fast, you blink and you miss it. Profits locked in before your screen even refreshes.
And the technical challenge there, scalping those tiny spreads. It seems small per trade, but the profit potential at scale is immense.
Right.
Scalping is all about making loads of tiny, quick profits from those fleeting price movements. Scalper X is built to exploit that bid-ask spread, that tiny gap between what buyers will pay and sellers will accept. It's constantly hunting for those fractions of a penny differences across thousands of trades. It works best in really liquid markets with tight spreads. Even a tiny edge per trade, multiplied thousands of times.
That's up quickly.
Hugely. And a human just can't do it.
Yeah.
You can't process the data, spot the chances, execute trades fast enough. Our latency, our emotions, impossible.
Yeah.
The bot's speed and precision cuts out slippage, maximizes profit on each tiny move. It operates in a time frame invisible to us.
Incredible speed. But okay, markets aren't always about tiny spreads. Sometimes you need to catch bigger moves,
Yeah,
right?
absolutely. Momentum matters too.
And that's where the next bot comes in. BreakoutBot, the momentum hunter. This one sounds like a predator, stalking price consolidations, waiting for the market to coil up, and then pouncing when the price range explodes. It's designed to feed Scalper X with fresh momentum, like a scout finding the big pushes.
Yeah, breakout trading is a classic strategy. It's about identifying when a price moves decisively outside a known range, usually with more volume.
Right, breaking support or resistance.
Exactly. When a stock breaks out of consolidation, it often signals a new trend, a strong directional move. A bot excels here because it can watch thousands of assets at once. Tirelessly. Using precise algorithms to spot these explosions instantly, often before humans even draw the lines on their charts. For humans, telling a real breakout from a fake one, managing the risk of it snapping back, that's tough, emotionally taxing.
Oh yeah, I've been there.
Right. But a bot like BreakoutBot acts immediately on confirmed signals. It gets in early on the momentum, maximizing the upside. It brings this dispassionate mathematical certainty to it.
Okay, so we've got speed, we've got momentum, but markets aren't just math, there's psychology too.
A huge amount, yes.
And that seems to be where SentimentSeeker the spy comes in. This bot is apparently glued to newswires, Twitter, Reddit, you name it.
The fire hose of information.
Exactly. Its job is to detect those rumor-driven spikes, those waves of hype or panic, and act before they even show up on your charts or hit the mainstream news.
Sentiment analysis, yeah. It's about gauging the collective mood of the market towards something.
And that's hard for humans.
Incredibly hard.
Yeah.
You're talking about processing a massive amount of unstructured data news, social media, forums, all in real time.
Too much noise.
Way too much. An AI bot, like SentimentSeeker, uses advanced natural language processing machine learning. It can analyze this flood, find themes, detect shifts in tone, quantify the emotional pulse.
So like if Elon tweets about something.
Exactly. Or if a crypto coin starts trending on Reddit with tons of positive mentions, SentimentSeeker spots this surge instantly.
Before the rest of us?
Well before the broader market reacts. It trades on those rumor-driven spikes or narratives before they go mainstream, catching that initial wave. It's like the ultimate digital eavesdropper, finding profit in the noise of human emotion.
Okay, now this next one feels really subtle, tackling inefficiencies that seem almost invisible. ArbitrageMaster, the spread sniper.
Ah, arbitrage, purest form of HFT almost.
It's constantly hunting for price differences across exchanges. The action is simple. Buy low here, sell high there. Faster than a human could ever dream. Pure opportunity, grabbed in milliseconds.
Right. Arbitrage is simply buying and selling the same asset simultaneously to profit from tiny price differences across markets.
Do those still exist? I thought markets were efficient now.
They do, even if it's fractions of a cent, temporary glitches in information flow, different liquidity on exchanges, slight delays. It creates tiny gaps.
Huh.
Imagine a stock is 10 pounds on exchange A and 10 pounds 01 on exchange B just for a millisecond. ArbitrageMaster hits buy on A and sell on B at the exact same time.
Risk-free profit.
Effectively, yes. These chances vanish instantly, but the bot's speed turns that into guaranteed low-risk profit. Humans can't see the gap, let alone trade it fast enough. The bot identifies it, executes both sides, locks it in.
Wow.
It's a pure speed game. Fastest system wins. And it provides these consistent tiny profits that really add up when scaled.
Okay, so we have speed bots, momentum bots, but sometimes it's not about speed, it's about seeing the unseen forces, right? The big money moves.
Absolutely, the underlying currents.
Which brings us to VolumeSurge, the flow whisperer. This one is designed to feel those sudden block trades, the whale moves, writing institutional flows before the retail crowd even knows what hit them.
Yeah, understanding institutional flows and the whole world of dark pools is critical for a real predictive edge.
Dark pools sounds mysterious.
They kind of are. Big institutions, hedge funds, pension funds need to trade huge blocks, millions of shares sometimes.
Right.
If they did that on public exchanges, the lit markets, it would move the price against them massively.
Yeah.
Market impact or slippage.
So they hide it.
They use dark pools, private exchanges, where orders are matched away from public view until the trade's done. That info is usually hidden from retail traders. VolumeSurge is designed to detect these big, invisible hand moves, maybe by spotting patterns before the block trade hits public markets, or analyzing signals from dark pool data feeds before they're widely reported.
So it sees the big money coming.
Exactly. Detecting these huge, hidden orders gives a crucial predictive edge, because institutional moves often signal future price direction. The bot can essentially ride these powerful flows, acting on info most people don't have.
Then there's MeanRevertor, the contrarian. This one sounds interesting. Its goal: profit when the herd pushes too far one way and prices snap back to their average, the market's hidden magnet.
Ah, mean reversion. A classic quantitative strategy.
It waits for the overreaction, then bets on the correction.
Pretty much. It's based on the statistical idea that prices, after deviating significantly from their historical average, tend to return to it over time.
Like stretching a rubber band.
Good analogy. If a price shoots way up or crashes way down, mean reversion theory says it'll likely move back towards its average. Markets often cycle between overbought and oversold due to emotion.
Makes sense. But isn't that risky for humans, trying to catch a falling knife?
Extremely risky. It takes huge discipline and objectivity to know when too far really is too far, and the emotional strength to buy a falling asset or sell a rising one at just the right moment. Very tough.
Yeah, fear and greed get in the way.
Always. A bot, though, can calculate statistical deviations precisely, identify extremes using math thresholds, and trade purely on those signals. No emotion, just objective execution. It brings logic to a psychologically difficult strategy.
Okay, and what about when markets aren't just moving but are genuinely chaotic? Wild swings, big news.
High volatility periods.
That's where VolatilityHunter, the chaos agent, comes in.
Huh.
This bot apparently loves news releases, macro shocks, wild swings. The more chaos, the more edge it finds.
Volatility is definitely a double-edged sword. Huge opportunities, but also huge risks.
Right.
When big news hits, prices can go crazy, unpredictably. That creates potential profit, but it's dangerous for humans. Emotions flare up, info changes too fast, mistakes happen.
Easily wiped out.
Yeah. A bot like VolatilityHunter, though, is built for chaos. It systematically identifies and exploits these fast, wide price swings. It trades based on volatility thresholds, manages risk using algorithms suited for fast markets, reacts instantly.
Turns chaos into opportunity.
Essentially, yes. It removes the fear and greed, replaces it with calculated, instant responses.
Okay, last one, but definitely not least. DarkpoolTracker, the invisible hand hunter. This sounds similar to VolumeSurge, but maybe more focused.
It seems complementary, yeah, focusing specifically on the nuances of those dark pools.
Its whole focus, watching hidden block orders, dark pool prints, to decoding big money moves before they hit the public, lit markets, like X-ray vision for institutional trading.
Right. As we said, dark pools are private venues for big institutions to trade without tipping their hand on the lit markets where prices are visible.
Why do they need that secrecy again?
Imagine trying to sell 1 million shares of Apple. If everyone saw that sell order hit the public market, the price would likely plummet before you could finish selling.
Yeah.
Bad execution.
Gotcha.
So dark pools let them execute large trades discreetly. The advantage a bot gets by decoding activity there, even if the info is delayed or partial, is massive.
How does it decode it?
It might identify patterns, specific prints, which are records of executed trades in those hidden venues, and then anticipate the impact these huge unseen trades might have when they eventually ripple out or get reported to the lit markets.
So it sees the shadow before the giant appear.
Exactly. It provides this crucial early warning signal, an informational edge that retail traders almost never get.
Okay, so we've met this amazing cast of characters, this bot armada. Each one sounds like a powerhouse in its own right.
Highly specialized, yeah.
But here's what they say is the truly revolutionary part, the twist. These bots aren't working alone.
The coordination aspect.
They're stitched together by something called DIPS, Quantum's Dynamic Intelligence Pooling System.
DIPS.
And this, for me, is where it gets really mind-bending. Because with DIPS, they claim every contributor, you, me, our capital, becomes an active node in this living machine.
Right. That's taking the swarm intelligence concept and really applying it directly to finance in a potentially transformative way.
Swarm intelligence, like ants or bees.
Kind of, yeah. It's about the collective behavior of decentralized systems, leading to emergent intelligence greater than any single part. DIPS acts like the nervous system here.
Connecting all the bots.
Connecting them, facilitating learning, adaptation, optimizing decisions across the whole swarm. Now, the material doesn't give the exact technical recipe for how investor input feeds in.
Right, it's a bit vague there.
But we can infer some powerful mechanisms. Imagine more capital means the bots can access deeper liquidity, make bigger trades without moving the price, much less slippage.
Okay, that makes sense.
Or, as the user base grows, maybe the system gleans anonymized, aggregated insights, behavioral patterns, risk tolerances that subtly fine-tune the swarm's overall risk settings or asset allocation.
Constant feedback loops.
Exactly. It's not just reacting to the market. It's optimizing itself based on the collective experience and scale it gets from its contributors. A truly dynamic, evolving system.
And this feedback loop, this collaborative evolution, leads right to their core principle. The bigger the pool, the smarter the swarm. The smarter the swarm, the sharper the edge. It sounds catchy, but they seem to frame it as their fundamental operating philosophy. Something legacy hedge funds just can't offer.
And that statement really does capture a potentially huge advantage over traditional funds.
How so?
Well, in a typical hedge fund, knowledge, strategies, capital, it's all pretty siloed within the firm. Their edge comes from their internal research, their star traders, private data. They learn, sure, but their intelligence growth isn't directly tied to the scale of their investor base in this kind of collective self-optimizing way.
So more internal.
Right. For quantum fund, though, more capital, more participants, it directly translates into advantages. More data for the AI to learn from, spotting subtler patterns. More capital means deeper liquidity for trading, executing bigger positions more efficiently, less impact cost. That boosts profitability.
Okay.
And third, this collective scale creates a broader base for the swarm to refine its intelligence. It's a self-reinforcing loop. Community growth fuels better performance, which attracts more community. Legacy funds just aren't built to leverage that kind of distributed, crowd-fueled optimization. Their knowledge is guarded. Here, it's supposedly shared and grown together.
So it really is like you're not just parking your money, your capital joins this collective brain, making it smarter for everyone.
That's the idea.
Swarm intelligence in action. And what that means for investors, they claim, is huge. Hedge fund alpha democratized.
Right, alpha. For listeners, that's basically the return you get above what the general market or a simple index fund gives you.
The extra bit, the edge.
Exactly. Generating consistent alpha is the holy grail for active managers. What hedge funds charge big fees for, democratizing it. Well, that breaks down the walls around those higher returns that used to be just for the super rich. It changes the whole dynamic. You go from just hoping your manager beats the market to being, in a way, a co-creator of the fund's edge.
Co-creator. How?
By adding capital, you're contributing to the system's ability to learn, adapt, refine its strategies. Theoretically, that leads to a sharper edge, better returns for everyone in the swarm. It's more collaborative, less one-sided than the traditional investor-manager relationship. You're part of the engine.
Okay, this is where we need some proof, right? The numbers. Talk is exciting, but
Performance matters, absolutely.
So Quantum Fund shared some insights from live tests. Get this. Scalper X alone, the speed demon, clocked a 91.8% win rate.
Wow, 91.8, that's extremely high.
Right. It had a 2.63 profit factor and kept drawdown under 8%.
Okay, those are strong numbers.
Now, imagine multiplying that precision by 7 more specialized bots, all working together through DIPS. That's not just theory anymore. That's a blueprint for what they call asymmetric edge.
Let's unpack those numbers, because they really are remarkable in HFT.
Please do.
Okay, first, 91.8% win rate. That means almost 92 out of every 100 trades made money. For any trader, that signals incredible precision and efficiency, especially at high frequency. Even top pros aim for maybe 50–60% if their winners are bigger than losers. Nearly 92% suggest an amazing ability to filter noise and execute perfectly.
Okay.
Yeah. Then the 2.63 profit factor. This tells you how much money you make for every dollar you lose. So for every $1 Scalper X lost on those few losing trades, it made $2.63 on its winners.
So winners significantly outweighed losers.
Massively. Not just more frequent, but bigger in aggregate. Anything over 1.0 is profitable. Over 2.0, it's exceptionally strong. Shows the strategy is robust, not just winning often, but winning more than it loses.
And the drawdown, under 8%.
Yes, and this is maybe the most important for investors worried about risk. Drawdown is the biggest drop your capital takes from a peak before recovering.
The worst dip.
Exactly. Keeping it under 8%, especially in HFT, which can be choppy, suggests really effective risk management. It limits losses, preserves capital, which is crucial for confidence and long-term growth without huge swings. Right. And all that together creates that asymmetric edge you mentioned. The potential gains are significantly larger than potential losses, or the odds of winning are much higher than losing. It's about making money intelligently with controlled risk.
Now, some people might be wondering, okay, great tech, but why a mutual fund structure? That sounds kind of traditional.
It's a fair question.
Quantum Fund says they chose it specifically because true scale and true access demand transparency. It's pooled, audited, profits distributed quarterly, no smoke and mirrors, no hidden middlemen taking secret cuts.
And that's a really critical point. It sets it apart from maybe less regulated ventures we sometimes see with new tech and finance.
Right? Provide some safety.
Definitely.
Yeah.
A mutual fund structure means strict regulatory oversight. That's a huge layer of protection and trust. Regulation forces transparency on holdings, performance, fees. You get a clear, audited picture. Plus, being pooled means your capital joins others. That allows diversification, access to strategies impossible for individuals due to capital needs, and quarterly distributions offer predictable income.
So it's familiar and regulated, even with cutting-edge tech inside.
Precisely. It's about bringing institutional-grade reliability to this revolutionary tech. Your capital, your edge, but collective power, like you said, and safeguarded by rules.
And that collective power, that potential for scale, that's where the vision really lifts off, right?
Yeah, the scaling aspect is key.
Because if this system works this well at, say, 100,000 pound AUM, imagine it hitting 10 million AUM or 100 million, same bots, same swarm intelligence, but an exponential edge.
An exponential edge isn't just marketing fluff here. It's fundamental to these kinds of AI-driven HFT models.
How does scale make it exponentially better?
Several ways. First, liquidity. More capital means the bots can trade much larger sizes without moving the market price against them, less slippage. They can absorb more volume, exploit bigger opportunities, use strategies needing deeper market access, fishing in bigger ponds, essentially.
Okay, bigger trades, less cost.
Right. Second, deeper market presence and better data. A larger fund interacts more with the market. That means richer, more diverse data streams feeding back into DIPS for the AI to learn from. The more it trades and observes at scale, the more nuanced its understanding becomes. It detects subtler patterns.
Your learning accelerates.
Exactly. It's a constantly strengthening feedback loop, refining prediction and adaptation. And lastly, economies of scale. Generally, larger AUM means lower operational cost per pound invested. More of the generated return can potentially flow back to investors.
So it's not just bigger, it's smarter, more efficient, more influential.
That's the idea. Scaling the intelligence, efficiency, and market influence of the engine, leading to that exponential advantage, a virtuous cycle of growth and performance.
So, look, if this deep dive has clicked with you, if you're tired of watching the financial future from the sidelines while others use these tools, well, this could be a moment. The Quantum Fund is set to go live Q3 2025, but, and this is important, they're saying it's not for everyone, it's for edge seekers only.
Setting expectations.
Yeah, and there will be limited slots. Apparently, that's not faith scarcity, it's operational. Early capital keeps slippage low, and the swarm needs to stay lean and fast to work best.
Makes sense for HFT.
So here's the challenge, I guess. If you've ever wanted to run with the same kind of firepower that powers Wall Street's billion-dollar prop desks, this is presented as an open door.
That opportunity.
Don't just watch the future unfold. Ride the edge. Join the swarm. That's the call to action.
Yeah, and it really makes you think about the bigger picture here, the broader implications of democratizing HFT.
Go on.
I mean, this isn't just a new product. It could genuinely reshape who benefits from the most advanced financial tech. For so long, these tools concentrated wealth at the very top.
Right.
If models like this can actually deliver HFT alpha to everyday investors, it could trigger a real shift in financial opportunity, change how personal wealth grows on a societal level. It raises that big question. What does this mean for the future of investing, for wealth distribution, for AI's role in finance, when its best tools become accessible, not exclusive?
That is a powerful thought to end on. How might this shift in access reshape wealth accumulation over the next decade? And yeah, what other exclusive advantages maybe in biotech AI development space might be next for democratization using similar collective models?
Exciting times.
Very exciting times to be an investor, or even just an observer of this kind of innovation. Definitely something to mull over. Stay curious out there. Stay hungry.
And stay sharp.